Hello everyone, and thank you for joining me in today's weekly analysis webinar. Today is Monday, the 20th of January 2025, and of course it's the beginning of a new trading week. Hopefully it will definitely be a profitable one. So thank you for tuning in this session today. We have actually changed the timing. Instead of being at 12 p.m. where I am, which is in Dubai, GMT +4, it has been pushed forward a little bit. To 3 p.m. and starting today, this will be basically the actual or the it's not a one-time thing. It's actually the timing has been changed forever. Why is that? A lot of reasons, but basically this I think will be better for both me and you as attendees for this webinar or session. Anyway, if you're having any issues or troubles tuning in at any point of time, just wait after the session. It's definitely uploaded on our YouTube channel at PU Prime, so you wouldn't really miss a thing. Okay, so thank you so much for tuning in, and yeah, it's an important week ahead. Why is that? Because basically we are waiting for Trump's inauguration. Today is the 20th of January, so the previous period, yes, he was the president-elect. Yes, he definitely affected markets, and yes, he definitely had a role in politics, what's happening in the Middle East and in Ukraine and Russia and so on. But during the previous period, it was a certain period. He was actually a president-elect, and starting today, he's actually the president of the US. So it's definitely gonna add some volatility to markets, and this is exactly what we are seeing at the moment. Volatility is just high across all of the major financial assets, and this is pretty much a strong reason to for markets, to add more volatility. The US president is just changing today, and although yes, we know that Donald Trump, he has been president-elect for a few months now, since November, but today is the actual day he takes office, and today is the actual day if he wants to impose any tariffs on China, Canada, and Mexico, and so on. The previous period were just statements, press releases, comments, tweets, and so on. But today the action takes place, and we actually start seeing those actions, whether they will be taken or not. So that's why markets are a little bit on its feet at the moment. So let's start by having a look on the economic agenda for this week. And to be honest, although the economic agenda might have a little bit some important details that we will be discussing shortly, I'm telling you that this week wouldn't really be about the economic agenda alone, but we will definitely monitor Trump and his actions in the White House. So this is something that you will not basically see on the economic agenda, but you must always be aware that anything that's related to Trump, especially that, he is not Joe Biden or any other president, let's say Barack Obama or anyone, they have a certain way of how to, manage the White House. And Donald Trump has another way that's been never in any other US president. Comments, tweets, press releases at any time for any reason, and just to add volatility to markets. So it's going to be an interesting 4 years period, hopefully 4 years, and brace yourselves, markets. We're going to have a lot of volatility in the upcoming period. We have a lot of he has done a great job with the ceasefire deal in the Middle East, in both Lebanon and during the past 48 hours as well in Gaza. However, he's opening new projects, new things, like Canada, like Greenland, and so on. So basically, you can never expect low volatility as long as Donald Trump is in the White House. Okay, so again, the economic agenda is important. We will continue monitoring the data releases as usual. However, you should always as well monitor Donald Trump as much as you can, because at any point of time, you can have any comment, tweet, or a press release that will definitely, hike the volatility in markets. Let's start by having a look on today's economic agenda. Basically, we do expect a little bit of quiet session or basically an off session today from the US because it's the Martin Luther King Jr. Day. So it's an off day in the markets. US sessions won't be operating today, but we will highly be watching the inauguration for Donald Trump today. And other than that, I wouldn't basically say that we do any other thing, or we don't have any other thing to look at the moment. Starting tomorrow, Tuesday, the 1st or the 21st of January, it's a strong London session. We will be having the average earnings index plus the bonus, or which is the wages data from the UK. We also have the claimant count change, and we have spoken about this before multiple times. The claimant count change is similar to the NFP from the US economy, but this is for the British economy. So it's a labor market data or a report that should be published tomorrow. We also have the employment change on a 3-month over 3-month basis, and the unemployment rate, which is expected to come around the same level of 4.3. Okay. What else do we have for tomorrow? We do have the ZEW economic sentiment from both the German and the European economy. And to be honest, my personal expectation, this one, the ZEW economic sentiment for Jan. So the previous month, which was December, it was 17 points. Expectations for January is actually 16.9. My personal expectation is that it will come lower than the expectations, lower than the 16.9. And I wouldn't be exaggerating if I say a lot lower. The euro economy is pretty doing nothing at the moment. It's really bad. When you have inflation consistently above your target, and you have the economic indicators or the economic indicators, your economy is not expanding. However, it's in a recession with high inflation. This is what we call a stagnation, and this is a pretty tough situation to be in at the moment. So even if the Federal Reserve is somehow facing higher interest rates consistently above its target, but on the other hand, the economy is doing good, right? In the Europe economy or the Eurozone, you have both sides at risk. So you have higher inflation that you actually want, and you have lower economic expansion or lower GDP or whatever it is. So your economy is not really good. Inflation is a little bit high. Why would the economic sentiment in the Eurozone be any good? So I believe this is expected to move a lot lower. Okay. No. Muhammad Rafi bin... No. Someone literally just sent a question and he said, I want $50. I want $50. So let's find someone who can give us $50 each. Okay. Moving forward to tomorrow's US session, and we only have the CPI or the Consumer Price Index from the Canadian economy for the month of December. As of now, we still don't have any official expectations from Reuters. And guys, for you to know, the expectations on the investing.com, most probably they are from Reuters. Okay, so it's not here. Maybe it will be updated today or tomorrow. Let's wait and see. However, not many of us really focus on the Canadian dollar. Anyway, we have the CPI for the New Zealand economy on the 22nd of January, Wednesday, and slightly expected to move lower from 2.2 to a 2.1%. This is basically the headline inflation, right? So this is not the core, this is the headline inflation, and that's on a year-over-year basis. What else do we have here? We have the ECB President Christine Lagarde's speech on the 22nd of January, and that's for Wednesday. So far, guys, Monday is nothing pretty much on the economic agenda. Tuesday, it's only the report from the labor market in the UK economy. And Wednesday, I would say pretty much nothing. Even Christine Lagarde, it's not really high volatility event, okay? Inauguration, Trump bullish USD or bearish? That's a good question. And Trump's inauguration itself, it's not bullish or bearish on the dollar. I mean, it wouldn't really take one side, right? But you might expect heightened volatility in both directions. Like, volatility would be higher. I wouldn't really say in one specific direction, because inauguration for Trump today, or Trump's inauguration, isn't something of a surprise. We already know that Trump will be inaugurated on the 20th of January since November, maybe the 6th or 7th. So it shouldn't be a surprise. It shouldn't mean that actually, okay, let's buy dollar on the 20th of January. It's not, right? Even yesterday, what happened, and we will talk about this shortly, what's happening in the cryptocurrency markets at the moment, it's not because of Trump's inauguration, but because Trump had this new meme coin, or the Trump coin, and then Melania Trump had another coin. So they are providing support to the cryptocurrency market, not just by his inauguration, but because they are creating new meme stocks or the meme coins and so on. So hopefully this is an answer to your question. Trump's inauguration today is not a surprise, so I don't really believe that the dollar will go any higher or any lower, but we can expect just volatility in both directions, right? Moving forward to Thursday, and it's the jobless claims, either the continuing or the initial jobless claims. That's on Thursday, which is, anyway, a weekly figure. And of course, the crude oil inventories, and it's not a big deal, to be honest. Yeah, maybe markets are focusing recently with the jobless claims because it gives you an indicator of the labor market, how it's performing recently. But it isn't a big of a deal, you know what I mean? Especially that the previous week, it's not month because it's a weekly figure. The previous week was actually around 217,000 new claims, and expectations are actually 220. So as long as the difference between the previous or the expectations is something around 3,000, 4,000, 5,000, it's nothing, because 3,000 of a difference from a number of 217,000, it's a tiny percentage change. And that's why I wouldn't really believe this could have any volatility on markets. Let's end this week with Friday, and it's the Bank of Japan. It's important. Let's say so far that during the whole week, I will only be excited about the Bank of Japan monetary policy meeting and interest rate decision, right? Why? It's expected to have volatility in markets. And I'm not sure why expectations here show that maybe we can see a 25 basis points of interest rate hike on the Japanese yen. I wouldn't really believe this could materialize. I mean, yeah, it's a chance, it's an option, but I don't really believe this is a strong probability. Okay, so I'm in between, you know, let's say 70% I believe they will keep interest rates around the same level of a quarter percentage point, and the remaining 30 or even 20% that they will be raising interest rates anyway. If they hike interest rates on the Japanese yen on Friday, expect a lot of volatility. Remember what happened back in August, was it? Yeah, I think it was August when they hiked interest rates from 0.10% to 0.25%. Remember what happened in markets and the carry trade, and how all of the markets were basically affected. Not only the Chinese markets, but also the US markets and the US stocks and so on, because people were suddenly losing a lot of money on their carry trade positions on the Japanese yen. So they had to sell or liquidate all their positions, even on gold, even on the US stocks and so on, to cover their positions on the carry trade. So this time I wouldn't say it will have the same effect, But if they hike interest rates, expect, that maybe we will have extra volatility during the week and maybe the next week. And yep, it's the PMI numbers from the S&P Global Services. It isn't really important because the main PMI is from the ISM. That's the official ones. However, PMI on the US dollar from S&P on the manufacturing, composite, and services sectors will provide us some clue and hints about how we should trade the US dollar during the next week. Do you think Trump inauguration would be sell the news event or buy the news? Apparently yesterday there was huge volatility in both sides. What side are you biased to, upwards or downward movement? That's a good question. Trump policies. Trump always wants a weaker dollar, right? Trump always supports a weaker dollar because he wants the exports, the US exports to the world to be more cheaper and so on and so forth. However, all of his economic policies actually lead to a stronger dollar, not the other way around. So I cannot tell you now what will happen because he says something, he says, I want a weaker dollar, but he supports the dollar from his economic policies on another hand. If we have time, I can definitely explain each and every economic policy that Donald Trump has and how it actually supports the dollar, doesn't, weaken it. But anyway, if you're talking about the cryptocurrency markets, I definitely expect volatility. If you're talking about the dollar, yes, but I wouldn't say huge volatility. Okay, I'm just expecting higher volatility in both directions. I wouldn't say, and I wouldn't expect one-way direction. That's a low probability for me. Can you show us on the crypto market what coins to buy related to Trump? No, I'm sorry. I'm not here to advertise any meme coins because, with all my respect to Donald Trump, Melania Trump has a crypto or a coin or a token. It's definitely a meme coin. And I'm not here, I don't really mean that you wouldn't make money out of it. You might, but you might lose a lot of money as well. So my advice is it's not an investment. If you want to play with it, you can just, buy $100, $200, $500, depending on how much you can actually afford to lose without even thinking about it, right? If you want, you can do it. And maybe even my close friends, I support them to do this, but use the amount of money that you will not be, sad if you lost it. Anyway, you can afford to lose. That's the definition of you can afford to lose, okay? But talking about this in an analysis webinar, what should I analyze? Like, come on. What could happen? And believe me, the crypto world is so creepy that today in the inauguration, when Donald Trump and Melania Trump are both together, let's say, for example, if he doesn't hold her hand, people might literally short it. I believe me, if I say this could happen. So why would I put my money in something like this? I will if I'm just, having fun. But, in order to give you a financial advice to buy it based on actually an advice, no, I would never do this. And you will have to excuse me for not doing this. Where are the charts? Let me get the charts real quick in a moment. Here we go. That's number 1 and that's number 2. Yeah, I think now you can see the charts. And let's see what's happening on the VIX index real quick. On the 20th of January, it's edging higher. So not entirely sure why is that, but we had a jump higher of around 5%. Let's talk markets and let's discuss technical analysis. Okay, first off, what I'll do is I'll write down here in the chat everything that I'm willing to discuss technically today, okay? If you have other things that I'll not be mentioning, you can just leave a comment and I'll make sure that I'll be looking at it before this session ends. So let's have a look on dollar, euro, pound, or euro, dollar, pound, dollar. I want to have a look on gold. Surely I cannot neglect gold. US oil. Okay. Yeah, and of course we're gonna have a look on the US indices. Let's say US Dow Jones, S&P, and maybe a quick look on the Nasdaq as well. Okay, and for you crypto guys, I'll look at Bitcoin. So I've just dropped you a message in the chat. If there is any other thing you want me to have a look on that's not, you know, mentioned here, XRP, okay, we can do XRP, but let's dive deep into this so we are not taking a lot of your time. First of all, what's happening on the US dollar? The previous week has definitely been a bad trading week for the US dollar. Why? On the weekly time frame, look at what's happening here. You have a higher high on a weekly candle, right? This is the previous weekly candle. And you have, you have a higher low and a higher high, right? It's supposed to be bullish. However, the candle itself ended bearish. So this alone on the weekly time frame doesn't really give me a bias. The only thing I can say is if we break the previous week's low, you will short, okay? If we break the previous week's high, you will buy. Not so useful so far because we are just on the weekly time frame, but I want to say is it seems that we are in a sideways range, right? Because we went higher a little bit but closed lower. So you will see how and what I mean by saying this. On the daily time frame now, things are a little bit more clear. Why? Look at this. We went higher, a strong impulse move, went for a retracement, another impulse move, but this impulse move was a little shorter than this one, right? You can see, roughly. And the correction was a little bit bigger than this one. Another shorter impulse, and now we are starting to move. Okay, we are still moving higher. But how about momentum? Momentum is lower, right? Momentum is decreasing. So, if you want to look at the momentum indicator right now, this is what you will see. It's a slight bearish divergence. Momentum is not able to follow the price action. So the price is making and forming new higher highs while momentum is just moving in a sideways. This says to me that, okay, maybe this great upward move is time for a retracement. Why? Because with all the respect to all of the retracements that we have seen, they aren't actually retracements. They are very, very short retracements, both in time, so it doesn't take time to retrace, and in price as well. I wouldn't really say that those are retracements. I would want to see a bigger retracement on the US dollar. What's this? That's a daily time frame, right? Let me see around here. Let me just check something real quick. This is where we stopped. Do we have any previous price action here? Yep, we do. Look at where we stopped. You see this, right? Yep. Wow. We are definitely moving lower on the dollar index, technically. Why? Because look at this. For you guys who attended my supply and demand webinar, you will know that this is a move lower. We created a brief, very brief base, and we went again lower. So this is a supply zone, right? This is a drop, base, drop. So how do we draw it? We simply draw it from the body to the wick. This is a supply zone. I'm not sure if we discussed the supply zone during the previous week or not, but yeah, you can see we are currently in this inside or inside this. supply zone. So I'm not buying the dollar, to be honest. Okay, I'm not selling yet, but so far I'm not buying. No, I don't really like buying the US dollar. You have weak momentum, you have a very powerful supply level, okay? And it's still fresh because it was created around here. We never touched the supply zone until recently. So it's fresh. You definitely have some unfilled orders here that will be filled now, right? So I'm not buying the dollar. And again, I'm not selling because pretty much, yeah, supply could be broken, but I'll be waiting to sell during the week. And if you want to know what I'll be waiting for, I'll be waiting for the level of 108.65 to break. Why is it 108.65? Because that's the previous low for the previous week, or the previous week's low. Remember when we had a look on, yeah, the weekly candle? So now we have touched resistance or supply zone. Now we have closed the previous candle bearish. It's not 100% bearish, as I said, because it's still a higher high and a higher low. But supply, and you're starting to see some bearish price action around here. If you have another third, let's say, signal in your side, in your buys, that's supporting, you know, moving lower, the third signal is by breaking below the 108.65. I'm definitely shorting the US dollar for some time, okay? So during the week, I'll be watching the dollar. A break below the 108.65 will move lower. If you work with trend lines, although I never work with trend lines, I hate it. And I see it as actually ineffective. But if you work with trend lines, you will see that the trend line is just around the level that I'm talking about. So a break below both is a break of a trend line, is a break of market structure because it's the previous low. And yeah, that's that. Momentum is on our side. Supply and demand is on our side. I'm just waiting for a break below 108.65 and I will short. What's the target? At least. No, not at least. It isn't really a great target, but my first target will be 107.85. It's the 50% Fibonacci, and you can see it's previously a resistance turned into support. So I'm looking to short the dollar. That's my first target, and the second target would be 107.30. Yeah, maybe around this level, and that's for the dollar index. Okay. Moving forward to gold. What is happening on the weekly time frame? Okay, you see this, right? This huge weekly candle followed by a big bearish candle. This is resistance. This is an area of resistance. What happened was we touched this level before. You see this candle? This level of resistance was really powerful that when we touched it on the 9th of December, this candle, look at how big the rejection is. That was the first time because there were some unfilled orders here. The second time we touched it was basically the previous week. Yeah, we still had some rejection, but not as powerful as the first one. Why is that? Because most of the unfilled orders were actually executed here. Yes, we still had some unfilled orders that were executed here, but the supply zone is getting weaker and weaker. It's no longer fresh. That I personally believe that during this week we will break higher. This is how I see it, and this is just the weekly candle or the weekly time frame. What I'll be waiting for, again, is a break of the previous week's high. So far markets are making sense to me this week. The dollar is a little bit bearish. I'm just waiting for the previous week's low to break and I'll short. As for gold as well, I'm waiting for the previous week's high to break and I'll definitely buy. And believe me when I say, if I buy gold at 27.25, I'm not closing before the 27.90 because there's literally nothing here that can stop us. You see this whole range of rejection. This is like a gap and we will definitely move higher to fill this gap, okay? And even market structure wise, we had a high, a low, lower high, higher low, and now we are having an equal high. So you can see how price is slowly moving higher. It's you know, if you just look from far away, you'll say, okay, it's sideways. Yes, it's sideways. Generally, it's still sideways. As long as we're trading below 27.25, it's sideways. But if you just sense the market and feel what the markets are doing, yeah, that's a clear higher low. So I wouldn't be so greedy if I want a new higher high, right? It makes sense. Okay, that's on a weekly time frame, and to be honest with you, it's one of these scenarios that I think the weekly analysis might be enough. However, no, it's not enough. Why? Look at the previous candle on the daily time frame on the Friday 17th of Jan. It's bearish, slightly bearish, because we had a lower high but a higher low, so it's moving sideways. This is what we call as inside bar. Now we are forming, yeah, this is volatility. This is volatility, right? We are pretty much doing nothing at the moment. If you want to be on the safe side, my friend, just wait for the 27.25 to break during the week and look at how many resistance levels will be broken when we break the 27.25. Look at this. This is just volatility. You will find rejections both ways. Technically, it's not the best area to trade. Fundamentally, I'm telling you, we are expecting high volatility during the week. Trump's on the White House door. So, just leave it for now. Just leave it. Don't waste your money on such, a chart that's not so good at the moment. However, when it breaks above the 27.25, it will be a brilliant trade. Maybe this is the first target, right? 27.45, and when we clear the 27.45, there's nothing here that will stop us. You see, wait. Yeah, here we go. This is just pure and simple analysis and price action. And yeah, I'll tell you something, because I get this a lot of times during the week. Most probably on the weekly analysis webinar, what I say is, if this happens, we will take this decision. So now, if the dollar breaks the previous week's low, I'll sell. If gold breaks the previous week's high, I will buy. What if it doesn't happen? I'll not take a trade. Personally, I wouldn't, because markets are not going anywhere. Okay, my money could go to the broker. I don't want to do this. So if I plan my trade and I trade my plan, that's really good. If I plan a trade and it doesn't move as how I expected, that's just fine. I'll plan another one, and so on, right? So for you guys always asking me, it didn't break higher, didn't break lower, just leave it. Just leave it, okay? Okay, now quickly let's have a look on currencies. And exactly what we said on the dollar could be just be, the opposite on the euro dollar, right? So we have a candle here that's done nothing, lower lows and lower highs, but it's just bullish, and this euro is poised to move higher a little bit. What's the threshold? Of course, yes, the previous week's high. The previous week's high is the 1.0355, 1.0355, and again, prices are moving lower, momentum is moving higher. This is more clear than the divergence on the dollar. So this is a bullish divergence. It's more powerful on the euro, and you can see, look, I'll tell you, that's a powerful, I will draw what's happening on price here so you'll understand a lot about momentum. That was the first move, right? Till maybe around here. We moved higher, we moved lower, moved higher, and started doing this, right? This is, yeah, somehow what I want to say, right? So you can see the power in the move at the beginning, and now you can see how the power is moving away. This is momentum. Momentum is slowing to the downside, which means once we have a break of the previous high, it's a definite buy. A definite buy. Let's see our stops. The stops is actually subjective. Personally, I'll place my stop around here because I'll actually need to look at a smaller time frame. You see this low that's currently being formed. Yeah, I think my stop around here will be enough, because once we move higher, this is a higher low. Once we move higher and break this high, so it's a higher low and a higher high, I will buy around here. My stops will be the previous low, which will be this one, and the target maybe will be around here. Okay, it's a solid 1.25% risk to reward ratio, and that's for the first target. Once we reach 1.0525 as our first target, stops to break even, open the target, and let's see how far this could go. Yeah, maybe 50%. So this has a total risk to reward of around 3%. Okay. First target is close a little bit. No, that should be here. Yeah, it depends on the target, but what I want to say is a break above 1.0355, it's a definite buy for me on the euro dollar. Let's see if the pound confirms what we have just discussed. Oh, the pound doesn't. It does, and it doesn't. Wait. See this small move lower? We formed a base, and then we strongly moved higher on the weekly time frame. So that's a drop, base, drop. And if you're gonna want to draw this demand zone, it's a very wide demand zone because it's basically a weekly candle, but you can see basically the pound is lagging behind the euro a little bit. So the previous week didn't end bullish, but it's slight bearish, and now so far what we can see is we are respecting this demand zone. Again, what will I be waiting for? Just a break above the previous week's high. That will be a definite buy. And yes, again, on the 1 hour time frame, you can see now we are trying to form a higher low. So we will be targeting the 1.2306. a break higher is a definite buy on the pound. So I don't want to be repeating myself over again and again, but what I want to say is that the dollar during this week, let's talk technicals. I'm not talking about Trump or what's happening, or I don't know, I don't care. I'm just talking technicals. Technicals is that the dollar is, I'm biased, more to the bearish side on the dollar, which means that we will be having a move higher on the euro, the pound, and gold as well, across the US dollar. Now let me get you something really important. Just because I am bearish on the dollar and I'm bullish on the euro and the pound and gold, does this mean that I'll just be selling dollar and buying euro, buying pound, and buying gold? Of course not. I'll never do this. Why? Because basically, when you do this, you're just increasing your exposure so much on the US dollar. Because at the end of the day, what could happen on the dollar, guys, markets are crazy and markets can do anything. What could happen is a move lower, we short, it again moves higher. Here, if you short dollar, you buy euro, pound, and gold, you have 4 stop losses in your trading account. It's really bad. However, in this case, what you can do is either divide your risk on those assets. So let's say if you're someone who trades for a risk of 1% per trade, right? Now you have 4 possible trades: dollar, euro, pound, and gold. Why not divide your risk on those 4 assets? So it's 0.25% risk on each one of them. If the 4 actually went south and you're not lucky, or our analysis was not so accurate, and it's normal, you will still have a total loss in your trading account of 1%, not 4%. Or the other thing to do, which I personally do, I will go over the charts again and again, and I will look for the best trade entry. So yeah, the dollar analysis aligns with the euro, aligns with the pound, and so on. But when it comes to actually pulling the trigger on one of the trades, which one on the chart looks more clean? Which one offers a better target? Which one offers a smaller stop loss according to your strategy? This is when you choose only one. It's highly probable because other assets actually confirm your analysis on this one, but you only choose one with 1% risk. If you lose it, it's still 1%. But don't just trade across all asset classes in the same direction with 1% each. You will seriously suffer from a 4 or maybe 5% loss in a week. That's a lot to recover from. Okay. A quick move on the US oil. It hasn't been crazy. We have actually talked about the US oil since it has been down here around the demand zone. So maybe back in December when we said that, okay, we are expecting US oil to move higher. And again, I'm expecting US oil to continue moving higher. Maybe retrace a little bit. Okay, but generally, any downward moves on the US oil is a good chance to buy. Maybe the nearest support on the US oil will be around the levels of 78. Yeah, right? I saw it in the morning. It was 78 exactly. Oops. Wait, what's this? That's the 1 hour time frame. Yeah. So the $78 per barrel on the US crude oil is something I'd personally be waiting for to buy. Bitcoin basically has done me really bad during the previous week. If you guys have been following me in the weekly analysis webinar, we had a specific entry for Bitcoin, which was a break and a close below the 92,050. Remember when we said if this happened, so it's definitely head and shoulders like this, right? and once we break, yeah, it was around exactly this level, and once we break and close below this 92,050, I'm personally expecting a move lower to maybe 80,000. I've said this for more than 1 week recently, and I always say you should always wait for a close, a candle close. You never should trade while the candle is still trading. And I actually fell into this trap. What happened is, you see this candle, that's on Monday. So on Monday, Bitcoin started trading around $94,000, and during the day it went so much lower that it broke this level, but it didn't close. I was so excited, and I just hit the trigger on a short position here, somewhere around here. And the stop loss was just above this, and believe me if I say my target was literally around $82,000 or $83,000, 83. So I was 83,000. I was aiming for basically around a 1.5 risk to reward ratio, and it didn't give me a chance. On the same day, it just rejected somewhere around here. It never closed below this, so I should have waited for confirmation, and it instantly hit my stop loss, and it was one of the worst trades I've had, maybe during the whole year, the previous maybe 1 year or something. Why is that? Because yeah, markets will sometimes humble you so much to let you know that there are some rules that you should always stick with. Number one rule is you should always wait for the candle to close. I got excited because Bitcoin was just moving so much lower. I was so afraid that it would just continue moving lower, or let's say I was afraid, or I was suspicious that it might crash. You know that sometimes when it crashes like $10,000-$15,000 in just a couple of minutes. So I said, okay, it started trading on 94,000. We were down around 3% during the day. I said, okay, let's do it and catch it early. It never crashed. My stop loss was the one, you know, to take the loss. Anyway, right now what we're going to see is definitely new higher highs. No word about it. Just, you know, cancel hold of the bearish thing, maybe. And this will be a very bad situation. Maybe we will see something like this. Maybe. Yeah, because you can see how much we respected the middle line here. So this is definitely the upper limit of the channel. This is the lower limit of the channel. Bitcoin's reaction to the $111,000 is what will decide for me the next possible move. If it just breaks higher, okay, just buy Bitcoin and leave it for now. Just buy it, okay? If it rejects the 111, so yeah, we will continue moving higher on Bitcoin, but with a slower pace, or maybe just a slightly tilted higher price channel, okay? And just to be fair with you, Bitcoin right now doesn't really move based on technicals, it just moves on market sentiment, right? Let's have a look on, I think you guys requested XRP. Someone requested XRP. Let's have a look. Crypto XRP. Here we go. Come on, why are you asking me? Come on. My God. No way. It's a buy. Don't tell anyone I said. Okay? It's a good buy. It's a risky buy though. Okay? Because you are just trading around a level of rejection. Maybe we'll I wouldn't say we will reject, because we tried rejecting it here and the rejection failed. But my whole fear is that maybe we will break a little bit and find some rejection around here. But yeah, the stop loss is around the previous, or below the previous low. And this impulse move might be replicated around here. No, I'm sorry. Wait. Oh, it's the algorithmic. It's the algorithmic anyway. It's a buy. I'm bullish. I am bullish. But again, if you're entering into a trade with a 10-to-1 risk to reward ratio, just don't put a lot of money into it. Okay? Let's end this session quickly with a look on the US indices, and I don't really like it so much. However, we are definitely going to target the previous highs. So it's a sideways range on the US Dow Jones. The last support was around here. We went lower. Previous week was a great week, 3.5% on the Dow Jones. So it's a sideways range. Respected support twice. Double bottom. So yeah, why not aim for a double top as well? Or two highs, I mean two equal highs. So I'm basically bullish during the week. I would expect to see something similar, a little bit similar here. On Nasdaq, it isn't as similar, but still the previous weekly candle was definitely an engulfing one, so there is nothing wrong with targeting the previous resistance or the previous high around 21,770. I believe S&P is also the same. Yeah, a very powerful candle. So yeah, Trump is in office. Buy US indices, and that's that. Let's end this session quickly with a look on the LTC. No, that's not the one. Wait. Litecoin, US dollar. Here we go. Not good. So that's a monthly candle. No. Okay, it's not good. Litecoin is not good. We had resistance here, and we had resistance here. When you have resistance around a certain price level, and we tried breaking higher, we failed. We moved lower, and we failed. So we are trading in a sideways range around a previous resistance. In this case, let me tell you that literally prices could do anything. However, my only reason that I believe it will go higher is just because of the Bitcoin hype and the cryptocurrencies, vibes it's been going on at the moment. So normally, technically, this is not a reason to buy from here, because it's a sideways range around the previous resistance. However, just because of the cryptocurrency hype, yeah, I'd somehow have a bullish bias. Again, it will be definitely confirmed once we break above the 135. So if you are a risky trader, buying here is for you. If you are not a risky trader like me, I would personally wait for the 135. No, I'll not personally wait, because I don't trade cryptos. I'm sorry, guys. I don't do cryptos on my personal. I mean, it's very rare. And when I've done it during the previous week, that was one hell of a stop loss. Okay. Do you guys have any questions? I'll give you a minute if you have any questions before we can end the session. Thanks a lot for all of these information. Yeah, that's my pleasure. And basically one of the reasons I I moved this session a little bit instead of 12 p.m. because 12 p.m. is normally, I start my work at 10 p.m. So I just have a little bit of local markets, what's happening here and there and so on. And I need to have some time to have my coffee and to have, in order for me to perform really well in the session, I must be 100%, focused. And that's why I thought, okay, let's push it a little bit, get my time, have my coffee. And so on. Next week, same time, yes, it will always be 3 p.m. And yeah, one other reason is that sometimes I get invited for TV interviews on Monday at 1 p.m. And for the previous maybe 1 year, I was not able to accept the invitations for that specific show that airs on Monday 1 p.m. because I was always on a weekly analysis webinar. So yeah, in order to try and handle both, I pushed it. So for all of the reasons, it was better just to keep it this way. So yes, every week, same time, 3 p.m. Dubai time, which is GMT plus 4. So it's 11 a.m. GMT. Excellent session today. Thank you. That was very insightful. Thank you. That's my pleasure. Is it worth having a look at oil? It is, and we had. So yeah, maybe you missed it, but we it's just a buy. Whatever trading strategy you follow, just it's bullish and it's continuing to be bullish. The levels of $78 is personally where I expect to see some support. The US dollar GPY. Eight-hour time frame. No, it's bearish, a little bit bearish for now, because we reached a top here, right? Maybe we will move lower, even if, Bank of Japan hiked interest rates. This might turn out to be a very powerful supply zone. Again, what's the entrance, or what's the trigger for the short? Breaking below the previous week's low. So yeah, this supports the dollar view as well. Thank you so much, guys, for watching this. It's almost 1 hour. That's great. Thank you. I'll see you guys next week again at the same time, 3 p.m. Dubai time. Please stay safe and please trade safe. Please use your stop loss. Markets aren't going anywhere. Your money might go to your broker. So please trade wisely and have a wonderful, wonderful week. Thank you, guys. I'll see you later. Bye-bye.